At a time like this, Ron, what indicators do you look at? How do you get a pulse of the market that then informs what you should do, if anything, with your money?
Well, I think not much right now, Tyler, to the answer of your latter question. And normally, I look at all three markets in concert: equities, interest rates, and commodities. And they're not all necessarily sending a unified signal as you would like them to. It's true that stocks have moved up and recovered off their lows of the week, and we had a nominal 5% correction. Rates are up on the taper talk, but some commodities are still under pressure, like copper and other base metals, which tell us that we don't have a synchronized global economic recovery underway. So I think right now we've got to kind of step back and let the markets find some levels that send a clearer signal, a better message, if you will, than we're getting right now, because I don't think it's a universally clear signal at the moment as we've gotten during other periods.
So, Mark, react to what Ron just said, and I sort of think he's nailed it. There isn't enough clarity to inform either a strong bull stance or really a strong bear stance right here.
Tyler, I'm afraid I can't disagree with you or Ron about the same thing. We've kind of straddled the sector biases that we had earlier in the year, which was very pro-cyclical, very pro-reflation, and really tempered our enthusiasm from some of those cyclical sectors into those more defensive growth sectors in anticipation of what was a confusing time. There was a lot of cross currents in the market relative to the loss of momentum in economic activity, heightened concerns that perhaps inflation is a little more sticky at levels higher than what the Fed is necessarily deeming to be defined as transitory. We are approaching, obviously, a Federal Reserve decision that we knew was coming, but nonetheless still remains unsettled as to what the pace of the taper is likely to look at. And let's face it, we're going to be confronting some fiscal issues here with regard to infrastructure, the $3.5 trillion spending plan, and, of course, the debt ceiling. So it's sort of a confluence of factors to us that we said, let's play some small ball for now until we have a little more conviction. And frankly, the evidence of the last couple of days is encouraging as we've seen cyclicals sort of usurp that defensive growth trade and reassert some sense of leadership, albeit embryonic at this nature.
You like Emerson Electric, by the way, and XOP, which is an ETF for exploration and production companies in energy. Energy has been a hot sector for much of the year. Ron, let's turn to China, if we might. It has been a place of real focus this week, first with the news on the debt-saddled real estate company, number one, and number two, on today's news that the country is going to ban activities in not just the mining of, but activities in cryptocurrencies. What's going on there?
Well, clearly China does not want a competitor to the yuan or the renminbi, whichever of the two you want to characterize as their sovereign currency. And I think increasingly, Tyler, as I wrote earlier today, I think that a lot of countries may ultimately adopt this view, El Salvador notwithstanding. And by the way, they've taken a hit after adopting Bitcoin as a sovereign currency. It's down substantially from the first day that it traded there. And so that devalued effectively the purchasing power of Salvadorians. So here at home, Gary Gensler's made some very sharp comments. Janet Yellen less so, but still very cautious on crypto. And I think at the end of the day, China may be the first to ban cryptocurrencies, but may not be the last country to do so. If you read the Constitution, Section 8 says the Congress shall have the power to coin money and regulate the value thereof. And so that's where this is all going to ultimately go, as Gary Gensler, the head of the SEC, has indicated, that there's more regulation and more oversight to come. And from my perspective, again, Bitcoin and other cryptocurrencies, not blockchain, not the underlying technology, to me are still solutions in search of a problem, particularly if we get a digital dollar at some point in the future.